is a great white shark. Yeah. Oh, God. Who's in here? Who's in my house? Let me see in the chat. Okay, okay, okay. Ding dong ding. Oh, Bitcoin. Hmm. Gotta love Bitcoin. Very volatile. Yep. Clearing people out. So almost 1,000 of those longs fell off on Bitfinex. So yeah, we're gonna spend the stream on Bitcoin. We're gonna look at some probabilities, the weekly, the monthly, some reverse Fisher levels on some high time frames. Try to get a little bit of confluence, right? And at the same time, we're still going to look at some probability levels to the top side. Because if you didn't know, Bitcoin just, I mean, this is why we trade volatility, probability, and statistics. It's the only way to attempt to hunt this beast, right? And that's what we're doing. Volatility hunters. We're hunting this monster. A lot of people don't like it, right? A lot of people don't like trading Bitcoin. Well, it's because they don't know how to trade. That's the biggest problem, you know. So that's what we do here. We trade volatility, probability, and statistics, and we teach people to do the same. So wonderful. What are we going to do? I got a weekly chart up here. Got a projection from the 60K high right here after this top out at about, what was that, at 65? A little over 65. Then we got, we had a couple down days, a couple up days, and this is where we really got the flush right here. Now, one thing you need to understand is how Bitcoin loves to pull back, right? On these missions here. And this pullback right here, that was that 50% pullback from 60 to 30K. That's a massive. I mean, we didn't even have any 50% pullbacks in the last bull run, right? But this very easily on a weekly. You go back here before we made the run up. So right here, here's the run up to 20K, the last real bull run we had. Look at the percentage of this pullback before the final 5 weeks. Before the final 5 weeks, there was literally from here to here, 240% increase. Okay. But this week right here, whoop, 30% pullback. All right. So are we in the midst of that right now? Well, all we can do is just watch the volatility, right? And there's one thing, and this is what I'll do first, right? I want to get up here at the top. What's a 30% pullback? 30% pullback is actually a little over 48K. Now I'm going to show you uh some levels. There's some things down there around 50K, right? Which would probably be about 28%, 27% pullback, right? And if you look at this projection on the weekly, how we rejected off the 95.4, we've got this projection from the 60K high right here. You can see, why am I using this? Well, because there's validity to it, right? These 2 weeks came down, tapped the 99.7 on this distribution projection, went sideways, pumped off of the 95.4, kind of rolled over here a little bit, right? Kind of rolled over here. And this is where I got the new projection started. We came up here and it got above the mean of this projection, right? Started making a run, but it got stifled. What did it get stifled by? The 95.4 Laplace distribution range on this Laplace distribution projection. Now we're coming back down here. We're testing this mean again. We actually tested already the bottom side, that pink line. That is the bottom side of this 68.3% Laplace distribution projection. That's where we just went down to. That's literally at 58,570. Look at the low on the exchange, 58,611. This is why we love to use the distribution to try to tame this beast, because that's exactly what this thing is. You come down here and you look right around 50K, it's the top side of the 68.3 right here. All right, so right about 50.7, 50.4, right in that area. You go over here onto the volatility range estimator. It's got the daily, monthly, weekly. Let me turn off this projection. Daily, monthly, weekly price action volatility ranges. First thing you're going to do is, let's see, we all know, right? We got this tight weekly volatility range. What does a tight weekly volatility range mean? That we are going to trend. Now that can be, you can have half the damn trend to the downside, the other half right back up to their weekly range. You just never know. That's why you got to keep an eye on these indicators. But you can see pretty much, we opened up this new weekly. It tried to get up above it, didn't work out. Staying green line, still here. Let me save this chart. Don't you ever come back, little green line. Tired of you. You know, we had this little nice little fake out right here, right? Would that have been a good short right there? Sure it would have. Sure it would have. I mean, for crying out loud, that was up there, what, 66, 66.3? I mean, it was literally about 6K above where we're at right now. But we have been below this, right? So right now, we pretty much range to the downside. If you take all these moves in, I mean, we're probably talking about $8,000, probably $9,000 of a trend right now. It's just all the way down. This green dotted line right here, that is the first support level, right? That is the first support level of the weekly price action volatility range. Is this little line here, is this based on data set highs, data set lows? No, it's not. It's not at all. That's a good way to get wrecked, by using those areas. Do sometimes those areas play out? Yeah. Show me where a price action goes and bounces from or rejects from. 9 out of 10 times, I'll show you a distribution level. Why people think, oh no, this is the reason. This is the reason why it rejected there. This is the reason why it bounced there. No, it bounced or rejected there because of the distribution. That data set just happened to line up with it, right? This is why, I mean, this is why we trade this way, because this math does not break, but traditional support and resistance levels, they do break. They break all the time, right? People be like, oh, this is great support. I'm just going to blindly put a long in, or I'm going to blindly put a short in, and then they're wrecked. Probably because they're emotionally attached to their trade, and they're like, no, my support lines, they're just the all-powerful thing, and bam, liquidated. So this is why we trade the way we do. You can see, where did price action go down to? This is the second support level of the weekly volatility or price action volatility range. This blue cross line, white cross line, right? The white cross line is the 95.4% Laplace distribution range on today's daily candle. The blue cross line, that is the daily second standard deviation normal distribution. They were real tight together on this daily, right? We open up the day, whoop, did not test this daily volatility range. So this is what you got to ask yourself. Are we going to go back up here and test this daily volatility range first? And this can happen. This can happen in the next couple hours. This can happen tomorrow. This can happen on Wednesday. It doesn't have to happen on the day. Mark my words, though. This will be tested. It always does. This is where people, they get lost, right? You can't see the forest because of the trees. So you need to take all this into account and realize this area, price action opened up. Remember last week, price action opened up and ran away from the old weekly volatility range and that daily range. And then last Wednesday, what happened? Whoop, we got that big wick, went down, tested that daily range and that weekly range. Happens all the time. And so what do people do? Oh, scam wick, right? Because people don't understand market dynamics. They don't understand price action volatility ranges, and they damn sure don't understand the distribution. That's where they're faltering. You can trade however you want. If when you're losing a trade, you're going to find somebody like me on the other side of it smiling, right? And I'm not even trading that much lately. We've got a lot of other stuff going on. But that is just one fact for sure. Know it. So this level right here, we're talking 64K. Top side of it's almost 65K. You got about a $400 range right here. Somewhere in here is going to get tested at some point in the next couple days. So got to ask yourself, is price action going to go down to these lower levels first and then rip out of there in the next couple days and come back up, test this weekly range, and then going into the rest of the week, but get above this tight weekly range and trend back up to the upside? It damn sure could. It damn sure could. But you just bet. You just watch. Watch in the next 48 hours. I've seen it go as long as 4 days before, never longer than that. 95% of the time, it's within 3 days, right? And probably about 80% of the time, it's in the first day. It'll go back up and test. That's going to take a powerful move to do today. I really don't think it's going to happen. We're more likely to get a new daily volatility range at this point. What does price action do at the end of the day? Usually, right? Everybody right here is going up. Here we go. Here we go. Oh, we're going to dump out. Probably getting in shorts. Boom, you just got wrecked because you don't understand this red cross line. That's the top of the monthly price action volatility range. The center is right here, this yellow cross line at 57.2 area. The bottom's right here at about 55.2. Okay. And then the first support level for that monthly volatility range, I believe, is like around 48, 47 something. Yeah, 47.4 area right here. Let me go back up here. So now I'm going to be real interested when we get this new daily. Why? I want to see really what I want to see. I want to see where the second standard deviation in the 95.4 Laplace distribution range is at. We close right here. Likely to be, you guys, off for a second. Shut the fuck up. Ooga ooga. All right, I'm back. Had to beat the dogs. What are you gonna do? Um, where the hell was I? It's getting deep. This is the way my mind works, right? I'm always, always. I drive people crazy. So I'm always like looking at all this, looking at, and then people are amazed when they're like, "Oh, what the fuck? Price went right there," and I'm like, "Yeah, I told you price was going to go right there at some point." These areas, I want to see where the 2SD. That's right. I want to see where the second standard deviation normal distribution is, and the 95.4 Laplace distribution on this new daily. Let me get a peek here real quick. Right a second. They're literally, we closed right around in this area. They're probably going to be a little bit below. They might be right around where this third standard deviation is today. But generally, they're going to be right around the center of this monthly volatility range. Actually, probably a little deeper. No, not really. Probably right around here. Somewhere in this area, you're going to find 2SD normal distribution, 95.4 Laplace distribution. That's what I really want to see. And we might even get a third standard deviation right at the bottom of the monthly volatility range, 55.2. Because here's what I'm looking at as well, right? I'm always looking for divergence between price action and returns, especially on the daily. It's a shit show right now. There is no divergence. This move could just be getting started, right? This move could just be getting started. So let's look at a projection right here. Let's throw, we've already got this one right at the all time. You know what? That is more bearish of a doji candle. We can start it there. That's fine. That's fine. So where is you could already see the price, right? About 48K. You come down here on this projection from the beginning of this down move, right? We went sideways a little bit. You could almost start it from here, but I like this starting point here, especially when let me get this PV2 up one candle. 27 right there. There we go. So the projection from back here, where that was actually the like what was that high? 67, whatever, 67.2, I think, when we hit that high. Then we had this pullback, all the sideways action, a little move back up the upside. You can see the 95.4 Laplace distribution range. Tomorrow is about a little under 50K. All right, now that's going to be a hell of a move. That would probably be a little out of the range, but we'll see. Because whatever's going to happen here, we're either going to hammer down quick to the downside and bounce like crazy and come up, or today and the beginning of tomorrow, maybe 3/4 of the way for tomorrow, we're going to work our way down, right? And it's right there around 50K area. And the 99.7 down here is actually 47.4. What was it? 47.4. And of course, I'm a holder of Bitcoin. I hate talking about these numbers. Trust me. But at the same time, as a trader, I'm fucking foaming at the mouth, man. Foaming at the mouth, throwing some Hail Marys down in these areas. Because you never know. Go down here, what was that at? That was 47.4. Look what's down there at 47.4. The first support level for the monthly volatility range. I'll tell you what, man, this price action goes down to there. I mean, we get just some massive sell off and this thing drops. And that's literally, right? That's a little right around. It's probably about a 32% move or something. That thing's going to rip the hell out of there. I mean, you could see some massive, massive price action. And I do believe we're going to get some. The thing is how low is it going to go? How low is it going to go? And it's going to depend on these next two daily distribution levels for sure to see how they're lining up with all these areas. It could just dip deeper into the monthly. And hell, it might not get below 55, right? Down here at the bottom of the monthly volatility range. You can see though, right? We got down here, it dipped into the liquidity pool down here in the monthly volatility range. Ripped right out. Right? And so what do I look for? If that was a bottom, this would already be tested, in my opinion. This would have ripped the hell out of here big time and probably trended all the way back up to test this daily volatility range. It did not do that. It did not do that. And it actually, it rolled over again. But what happened? Dipped back down here into this volatility or into this liquidity pool in the monthly volatility range. It bounced right back out. But then it gets stifled by this last 4-hour candle, first standard deviation, normal distribution. So yeah, what else can we look at here? Let me go back over to the distribution real quick because I want to put this on the weekly. What's that? Okay. So on the weekly, right? On the weekly, the first, let me see here. The first standard deviation on the weekly, we went by it. We pulled back up inside though. It's at 59,599. The second standard deviation normal distribution is a tick under 54K, 53,850, right? 53,850. Then you got the third standard deviation on the weekly, a little under 50K, 48,658, right? And that is down here, right here. And let me, how did that, oh yeah, because I just moved it. Let me put this baby back one more now. 28, back on my weekly. Boom, perfect. Um, hmm. Four. So if we were to come back and test this mean, we're talking even lower than that. 44 to 230-ish. It's more likely, like I said, it's more likely to come down here and test the 68.3. If we do get a nice little sell off right there, it's about 51,430. Because that's the whole thing with this stuff. Sometimes it doesn't hit it directly. That's why I love this projection, because it gives you an idea, and that would be right in between the second and third standard deviation. I mean, it's pretty much centered right between them. So I'll be looking when we get this new daily here, what standard deviations are going to be lining up with this 68.3 tomorrow, right? And Wednesday. Or shit, it's going to be Wednesday for crypto. What am I talking about? So what range on Wednesday is going to be lining up? Yeah, that's right. It'll be a day 3. Yeah, I mean, I fully expect this thing. I mean, like I said, it's usually within 3 days, but it could go into Thursday. At some point, we're going to go back up and test that 60, 64, whatever area, 64 or 5. Get that area tested. Let me see if there's any. Stream chat. Uh, yeah. And Andy brings up a good point too. And that's a chart I'm going to next. Yeah, I've mumbled everybody to death on this enough. Let's go to to our powerful little indicator here. So what just happened today, right? A dotted line right there, that's a reverse wave trend on the daily. Went down and tested it as well. And then you've got this log MA down here at about 56.7. But this bottom log MA that really has done a good job, if I go back in history, I mean, it's about 51.2. But then you got the daily reverse Fisher. And that is like, you can see, that's where price action bottomed out last time, right? Right on the reverse Fisher. It loves to catch price action, really does. So that's down there around that 50K area. And right, what does Bitcoin always do? People will be like, oh, we're going to this level. It either way overshoots it or it'll get front ran. It tries not to let people really get good entries. And that's why we love the distribution, because when you project a distribution, those areas usually get respected. And like I just showed, like that would be in between that weekly second and third standard deviation, where, if you're going to put orders in at the 2SD or the 3SD, hell, if you're at the 3SD, it might front run it and go just right to that projection, bounce from there. So that's why you got to put some orders in, where you different areas. But at the same time, I mean, you got to monitor your trades. You can't just do this blindly. This thing will just wreck the shit out of you. Wreck. Let's see something. Pretty funny. You go down to this reverse Fisher, it's about a 27.5, 27.5% pullback if it were to go back down here. Raising every day, obviously. Raising every day. We got these top two log MAs, man, they're turning down. They are turning down. Dude. So bring the front. Yes, bring the front. You too. Let's get you up in front. Dun, dun, dun. Dun, 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 dun. There we go. You can see the slope, right? They're turning down. And this is on a daily. You see these things turn pink? It's party time, right? Because what does that tell you when they turn pink? When these variance log MAs turn pink and they're sloped down, it's telling you returns are below the mean and the variance is rising, right? And what is variance? Variance is the spread of data around the mean. What's the spread of data around the mean? What creates the spread of data around the mean? The standard deviation of returns is volatility. Volatility is what creates the spread of data around the mean. So that's why we love these indicators. At some point they'll be available here. We're getting them wrapped up. Coders working on them, right? We don't rush them at all. We just wait, and it's like, woohoo! Santa Claus showed up. Because these guys, I mean, they're like it's perfection, right? They make sure they get their stuff really well. I mean, they're great coders, great coders. Let's see here. So yeah, tested the reverse wave trend, but I'm always, I mean, especially for pullbacks, I'm always looking at that reverse Fisher. Always looking at the reverse Fisher for an area if we do have a sell-off, because this thing, it's shaking out leverage to both sides, right? Shaking out leverage to both sides. So this, I mean, I mean, we're talking another 10K down. It can happen all day long. We haven't had one of these. I mean, hell, look at this. Look at this daily candle, right? I mean, hell, how much price action was in that daily candle? 52.9. $10,000, right? I mean, it can happen. Happens all the time. So what happens? We open up tomorrow, right? We open up tomorrow and just get a rip down 10K. That's going to wake some people up and wreck some people. Wreck them, wreck them. So I'm going to be looking at the new daily open too. I want to see where this new daily volatility range is. And I want to look, bounce over here. I want to look to see what my statistics, what's the entropy telling me? I mean, we're on the daily right here. This is fucking random as it gets. Random as it gets. And it's building a red candle, right? The DLP, there's literally, if you want to go back here and you want to take this point on the returns oscillator, there's hidden bull building, right? But that's like, show you a good way to do this. Is that 21 bars? So that's what you do. Take this Wolfspan indicator. Where are you? Okay, 7. 22. Now, if you create a length from back there to see if that hidden bull is still valid, no, it's not at all. There is no hidden bull, right? So that's a good way to see, yep, that's not valid anymore. But see, you put it back where I had it on a 7 length, it's going to show there's hidden bull building. But that's what you always want to do. If you're going back, and I don't care how many candles it is, right? I like to start mine low, right? Because usually I'm getting in, I want to use a 7 length on lower time frames. When I get on these higher time frames and I see divergence, I am going to take those points. I'm going to take those candles, and whatever the spread of that data set is, I'm going to change that to the length of the indicator I'm trying to find the divergence on. Right? That's something everybody should know. Everybody should know to do that, because it's going to totally explain to you the Wolfspan, the variance. We're having an outlier to the downside right now. That's what the variance is telling us. All right, it's the variance turned pink. We're having a statistical outlier, and it is negatively correlated. Pink on pink, right? When you see pink on and blue, that's a statistical outlier to the top side. Did we move? Yeah, we moved. That was like, let's see when that started. Yep, it was that candle 60.9 to, what the hell was that? Right there. Shit. I hate this little USD symbol. I would love to just shit can that thing. Drives me nuts on oh, it's still gonna be there. Smarty pants. But yeah, what was the high? 69.1 or whatever? 69.1. I mean, it was like almost a $10,000 move when we had this statistical outlier positively correlated. So this is what's powerful. And you can see right here on the variance, right? We have a statistical outlier positively correlated. Right here at the top, it turns negatively correlated. And that's what happens. It just goes sideways right there on that candle. Then it starts to contract negatively correlated, and we start walking up. We walk up that candle right there. Then it turns back up to the upside positively correlated. We start running back up. it starts to contract right there. You can see you got a nice bear wick right there. It comes down, but then it turns negatively correlated while it's contracting, starts to walk up again. You can see how this indicator works. It's pretty powerful. Here's a statistical outlier right here to the downside. Whoop, flush. So right now, we are having a statistical outlier to the downside. And hell, it compared, I mean, hell, it's about halfway up what this one did. Doesn't have to go that high. But yeah, this is going to be interesting to see how this plays out. I'll tell you that right now. We're also the historical volatility z-score is heading up, and it's heading negatively correlated, which that's telling you it's going to, the price action will come down if it stays like that. That's how this baby works. Let's see, what else am I noticing here? And obviously you got the APP, right? It's been up here just to the top side during this run. Right, the run from 41K this whole time. Hell, it peaked out right about there when we got that first high up there at 62, 63K or whatever. So now they're all heading down pretty heavy. And this is just the percentile of price. The only way to use this is, I've got them all on significantly different lengths. And when they all peak out or get to the bottom, right, it's like a warning. Use it in confluence. But all the volatility's been flashing, right? I mean, look at the 12-hour. Look at the 12-hour. Wow. I mean, this could get nasty. But that's what I'm saying. We could hammer down to the downside real hard, real fast, and then you could have a break in correlation while it's still expanding positive, and we're going to rip out of one of those areas down there and trend the other way the rest of this week. When you see a tight weekly range like that I showed earlier, it's $100 weekly range. You're going to have massive trend. Massive trend. It doesn't have to be in one direction. It can trend down hard and then trend up hard. So this is why when you learn these things, you don't get caught up in the shit, in the craziness, right? And there's a lot of FUD about Bitcoin right now and this stupid ass tax stuff. Bitcoin doesn't care about FUD. But these people use this FUD against the traders, right? Like right now, towards the end of the day, we're getting a little more move up to the upside, which might give you a little better idea where this daily volatility range is going to be. Let's see here. Let's go back over here. I mean, we're close to it right now. I'm telling you right now, we're really close because we started. I don't know. It could be lower. It could be lower. Maybe Bitcoin's trying to close above the daily price action volatility range. Hell, maybe we rip up here right now and test this. Get everybody freaking over leverage long again, and then it goes down and tests these lower areas. Who knows? Maybe that was the bottom. You never know, right? That's why we trade low time frames and we just scalp the volatility. Just scalp the volatility. Let's see. Yeah. Good indicator saying on that. Pop up here. What's that seeing? 5-day. Yeah, the top log MA. There we go. So we got the second log MA, which I believe I have set on a 33. It's down here right around that 50K number too. But like right now, we still on these higher time frames. I mean, I like the slope of everything, and hell, you've got these two log MAs still telling you returns are above the mean and variance is rising. So, and the high length one, I think I got it set on 144 or something. I mean, it's been blue the whole time. It's been blue. And if you're just a strictly trend trader and long term, and you're just in it to win it, I mean, hell, you never got out of this trade, right? Which is ridiculous as hell to me. You kidding me right now? This massive ass pullback, 50% pullback. You're not up here taking profits. That's your problem. That's not a good idea. Take your profits, man. Take your profits. And that's what's going on right now. But I'm still a firm believer. So right here, let me pop. Let's get a vertical. Right at the end of the year. Boop. There we go. Isn't that it's blue? We want green. No, we want pink. We're stopping at the pink. So if this makes a run by the end of the year up here to the 95.4, like I said, we're sitting at pretty much 100K Bitcoin, right? Does it go higher than that? Well, it sure could. It sure could. Let's move. Show you. Get my measuring tool. 18 bars. And these are the two projections I want to use for the end of the year projection for sure. The the 30K bottom pretty much, or hell, it was like 29, and the 41K. And so from back here, right, you've got the 95.4 up at about 122K. So I would reckon, just looking at the probabilities, that we'll probably end the year somewhere in between that 100 and maybe 120K region right there. And hell, that could be the blow off top before then we get like a, who knows, 50% pullback, come back and test 60K. Who knows? We'll have to wait, play it by ear. But right now we're just we're trying to figure out what's going on in the short term here, and this little bit of trend change we're having. But so you want to go over here and you want to look on the high time frames. I'm on this 12-hour, right? There's bull div. There's no doubt about it. There is bull div. I mean, I could change, but it's not that many candles from here to here. That's still valid. I would almost guarantee it. And on the 12-hour, right? What was support and price action down here? Reverse Fisher. Pulled right back up, both these candles. Pulled right back up above the reverse Fisher. Let's see. Whoa, what did I just see there? Yeah, we've got the top MA though. We got the top MA turning pink right now. You see these other two turn pink? We're going to get some party time. Some party time. It's definitely probably going to come down here and test this 56.4. This bottom variance log MA for sure. The 12 hours still having its outlier, right? That's right. If you trade high time frames and you got in that move, bravo. That's what this indicator is all about. So people don't understand, right? I love when people just are like yak, 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 yak. And it's like, okay, well, we got the tools, right? Alpha trading has the tools that everybody, in our opinion, should be using. Everybody. All right. We go against the grain. This has still got me going. Man, I don't know when we're gonna have this party, but this party, when this party starts, it's gonna be massive, man. Like I said, right now we're getting expansion on all three lengths, but they're all negatively correlated. What if this stays negatively correlated and we start to get more expansion? You're going to definitely see this thing tumble down to these lower levels. And then you're probably going to see on one of these 12-hour closes, these babies are going to flip. It'll probably start on the low time frame, is going to flip positively correlated. Then you're going to get the mid length, then the high length. Then we make this end of the year run to 100K or whatever. And you see a lot of expansion on this 12-hour. We move up that high, you're going to see red candles throughout all three of these. You can see as well, right? The Z-score of historical volatility. Look right where the Z-score takes off. Right here at this little crook. Look what happened with the correlation. At the same time, the correlation was heading up. It was positively sloped. Right after this Z-score heads down and decides to go back up to the upside, it goes negatively correlated. And when variance rises, negatively correlated, boop, 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 down we go. This is how we use all this together, right? It's just all a bunch of confluence of what you're seeing is going to be a powerful move to the downside. So that's what's great about these tools. You don't just have to scalp the low time frame volatility. You can high time frame trade this stuff. You can swing trade, you can trend trade, whatever you want to do with this stuff. But monitor your freaking trade, because Bitcoin loves to just flip on a dime, right? Know where these distribution levels are. Know where these monthly price action volatility ranges are. And when you start to get down to one of those areas, take your profit. So if you're in that move from 69 and you come back down and you hit the top of this monthly volatility range right here, it made it easy. It passed it. You take your profit right here. You take that profit on that move. I mean, it's a $10,000 move. If you didn't take your profit and you were in that short that whole time, shame, shame. We're gonna march you through the streets, right? Butt naked. We're gonna shame you and throw apples and heads of lettuce and shit at you. It's gonna be a riot. All right. What time is it? I got lost in the transition. 2:40. Nice. Felt like I've already talked an hour. The scalpers, right? How many candles to check the hiddens? If you want to check the hidden divergence, I mean, to be honest, if you want to check any divergence, just count the spread of the candles, change your indicator to that, see if it's valid, right? Just see it's valid. I've been doing it for so long, I can kind of look at volatility and the price action and stuff and be able to tell when it starts to get over like 13 candles. I definitely am probably checking just to see for sure. Because the longer it goes, I mean, think about it. As that data set, as that time series expands into the future, that volatility is changing. And so is the chances of that those divergences are still legit. You always want to check. And you never want to just trade divergence. That's where people get wrecked. Number one, they don't know that little trick. And that's, God, man, that should be just common sense. But that's a problem when people come from traditional TA. Hell, they don't even know they don't even know their indicators. They know how to look at them and be like, oh, I think that's divergence, but they don't know how to actually use the damn indicator to see if that divergence is valid. A lot of people on YouTube will just be like, oh, well, if it's past 14 candles or whatever, it's not valid anymore. That's a crock of shit because I've went back 50 candles and there's been div that's played out. You always got to check. Always got to check. And it comes these bears, or we're back. That we're right around the new daily volatility range. Guarantee it. Center of it, probably going to be right around here, 60.6 area, something like that from what I'm seeing here. And you'll learn how to do that. Where's most of the volatility to the downside, right? There was a little bit to the upside, not enough to offset this, and it's been down here too long. It immediately dropped. Woo! Like I don't know, a third into the day, pretty much. Yeah, about a third. Yeah, more than that. More than that. But yeah, so it's going to be down in this range somewhere. I mean, it could be a little higher. It's going to depend. If this price action would have went up here, because remember, this is the first standard deviation normal distribution, right? There's a 68.3% chance price action today closes up inside here. There's also a 68.3 chance it closes inside the Laplace distribution range up here. So you always got to take that into account, right? Always got to take that into account, especially when you get below the second standard deviation or the 95.4 Laplace distribution range. What's that telling you? Right? So if it's the 95.4% Laplace distribution range, there's only a 4.6% chance price action stays below this at the close today. I mean, hello, this is where the math comes into play. It's all about probabilities. That's what we do. It's all about probabilities. And so when you get into these lower levels, the probabilities are very high that you're not going to stay down here. That's why a lot of us know. What do you do when you get down here? Around the third standard deviation, 99.7%. Right? There's only a 0.03% chance it closes outside here. And so when you're down here at the 99.7, and there's a 95.4% chance it closes inside here, it's almost a no-brainer, right? It's almost a no-brainer. The probabilities are on your side. Just be careful. Don't trade it blindly. Monitor your trade. And if this mad little freaking beast decides to hit a fourth SD or a fifth SD, you're going to get your ass wrecked. Is what's going to happen. Big time. But when you see a third inside the monthly volatility range, it's high probability that you're going to get a hell of a bounce there. I mean, right here when we were getting this move, I had a shitty night of sleeping. I went to bed. I dozed off about 11. I woke up right at 2 o'clock and saw this candle screaming down here. I'm fumbling around trying to find my two-factor authorization device, trying to log in because I was gonna fucking jump on a little trade. I was up to 4:30 in the morning, right? I was up till 4:30 in the morning. It front ran me a little bit. I didn't front run it, right? Enough. I had it down here. Where'd I have it down? This is the fourth support level on the daily price action volatility range, right? So I front run that by about $50. It wasn't enough. It bounced out of there. Then now I'm all just, and my sleep got so jacked, I stayed up until about right here. And of course, I'm just kicking myself. I'm like, that would have been a hell of a trade if I would have got filled down here. It's right in this area. What was it at? It was like 58.4. Yeah, 58.4. I was trying to get in on a nice little scalp. So yeah, it's all good. It's all good. Because when I woke up, I got in a nice little short. I had one little trade today. That's all. In and out. Dink dink. Nothing like I really wanted. I mean, volatility traders, we're foaming at the mouth while everybody else is calling mom and crying and shit, and they have no idea what's going on. Should I sell? Should I buy? What should I do? I'm getting wrecked. I'm screwed. I need my hand held. The volatility traders are like, bring it, right? And you'll see a lot of people say, oh, Bitcoin, oh, you don't want to trade Bitcoins, especially on low time frames. It's way too volatile. It's like, what the fuck are these people talking about? That's what you want. You want volatility. Christ's sake, it's boring as shit. It's boring as shit when there's no volatility. So yeah. But then you got to consider, you start talking about volatility, people just their eyes roll in the back of their head and they're like, are you talking about volume? It's like, no, I'm not talking about volume. That's why be careful when you like, just use the VOL. You're trying to give it a nice little short title because people 9 out of 10 times think you're talking about volume. It's like, nope, not talking about volume, but you should take a volume and stop using the order books and the freaking the volume. And I mean, the VPVR, when you get a big node, I was talking to MJ earlier. I mean, I never look at it anymore, but when I used to look at the VPVR, you're going to see where there's a big node at, right? Where there was a lot of a lot of actually volatility in the volume, where people were buying a lot. But do those areas break? Yep, all the time. All the time. 100%. You cannot trade that shit. You cannot trade it. Trade the price action volatility ranges. Trade the distribution. That's your safest bet. And how do you know where these areas are going to bounce from? That's where all the statistics and the divergence between price action and returns comes into play. It's that simple. It doesn't get any easier if you really want to become a successful trader. Why not go to what the volatility, right, is the basis. The volatility is creating everything. It's what's creating the spread of data around the mean. And the spread of data around the mean are the standard deviations, right? Let's see. Let me read here. Yeah, regular divs too. So screwing me too. I work noon to 7 this entire middle day. Yeah, it's all good. It's all good. It's oh yeah. I was gonna look on these, right? These higher time frames just to see, right? Are there any divs building? Like I said, daily? No. There's no bull divs building at all. But like I talked to MJ earlier and I was like, but you need to understand, bear div did not this bear, there was no bear div on the daily anywhere, right? Nowhere. These are all higher highs, high, right? We never had a higher high. Now, if this price action would have went up here and created a new all-time high like 73K, and you get this little rejection from under the mean, that would have been bear div. So this move was not created by bear div, at least not on the daily. Not same thing on the 2-day. No. Now, if you want to go all the way back here, then again, so what are we going to do on the 2-day? 24 bars. So now the top on the 24 is about up here, and yes, but not all the way back here, right? We're talking about, see, we had this nice down candle, so you can use that area right there, but more likely is what would be better to use the top of this data set, right? And that would actually be, right, this little crook right here. And then we get this higher high over here, right? Yeah, there was bear div. There was bear div on the 2-day. And if you have it on 7, right, it doesn't show. I mean, it shows it from way, way back on this bad boy, right? Boom. But you want to change it to see how that changes the return oscillator. So is what that's telling me, maybe it wasn't valid all the way back here, but it damn sure was from this top. And so when you see it that there was from way back there, and then you change it to the length of the spread in the candles, and you see, yes, there was bear div there too. It's like, this is highly likely to play out. 3-day. Now, 3-day, I don't even have to change this bad boy. Yes, bear div. Bear div for sure. 100% on both of these. On this big candle, top, I'll call that a little top because we went sideways a little bit. But if you want to go to the top of the data set, right about there, you got this little point right here. Bear div from both. Now tumbling down, tumbling down. And yeah, no bull divs building at all. No bull divs building at all. 5-day? Yes. Don't even have to, I mean, boom, it's right there, right? And on the 5-day and on that 3-day or whatever, right, they were turning down under the zero mean. The returns oscillator was. Now there's no, I mean, you had a little bit from back here. But that's, like I said, I would rather use the top of the data set, right? So you're looking at this right here, and there wasn't any bear div. Wasn't until you got to this high and then this higher high, then boom, you got trapped up under the freaking zero mean. And now we're tumbling down on this 5-day candle. Yep. About the 7-day. 7-day, a little bit of bear div too, for sure. 100% bear div. Weekly, little on the weekly. Especially, you see it happen under the zero mean, right? That's just like, oh shit, where are you going, Bitcoin? Are you going to 50K? Right? Where are you going, little bitty? Let me put this on the index so I get more. And then you see the Z-score log returns, it's turning down too. It was definitely not bear div on the Z-score log returns, but it was definitely, it's right here. Right here. And actually, if you want to go all the way back here, but I like to use the top of this data set here, right? And there really wasn't kind of a weak bear. Here's where the real bear div was, right there. About a monthly. It's happening over here on the monthly. Now the monthly, on the other hand, nothing yet. Nothing yet. Now, if you go all the way back, I mean, guys, we're talking what, like a couple years. Holy shit. January or June of 19. No more. 2.5 years ago. I'm not looking for divergence from 2.5 years ago, to be honest. I mean, is the indicator showing it? Yeah, but if I change that returns oscillator, it's not going to show. And so I want to go to the top of this data set. So we're talking this little crook in the neck right here, actually right about here. And I mean, there's just a little bit of weak bear, right? You got a little, I mean, because the returns oscillator is attempting to turn down, right? Is attempting to turn down, but it's really just going sideways at the moment. In the data sets up here are flat. So that's going to give you some read of some weak bear. Volatility wise, slow length. I mean, we're negatively correlated, contracting, right? Contracting. Does this volatility start to expand here? Because we're already, you can see down here, we're going positively correlated and it's contracting, which is saying down. So who knows where the hell this thing goes? They want your Bitcoin. Yes, they do. They want it all. So now, where's the reverse wave trend on the monthly? Oh, it's down there at ugly numbers. Let's not even go there. Where is the top MA? 45 on the monthly? 45? Think that'd scare the shit out of some people? We go down to 45 and then from 45 a rip to 100? Hey, man, it definitely could happen. Because what was that 30% number? 48? You just got to always be prepared. And I mean, if this thing really starts dumping, that's when you start foaming at the mouth because you're like, holy shit, you can get in down there somewhere, right? And ride this baby up. Because when you do go back in these time frames or on this weekly, and you go back to these bull runs, where the hell are you? There it is. You know, usually the year after the halving, right? We had the halving in 2012, 2013. Woo! To the moon. You had the halving in 2016. What happened at the end of 2017? You're looking at it right here. The last 5 weeks. Look at this percentage of a move. After the week before, we had a 30% pullback. Is the same thing playing out right now? Could be. The next 5 weeks, 240%. And this is what I did too. So go over here. Let's go back over here. Boop. So first thing I want to do, so where's that baby? Let's say it goes down to 55. Or, I mean, you got to be realistic though, right? Got to be realistic. First, yeah, let's start from 50. Let's start from 50K. $240% move. I mean, that's $172,000 Bitcoin, right? And I'm not doing fractal shit or anything. I'm just looking at what happened after the last two halvings. The following year, they both had bull runs. Powerful move. If the same thing were to happen this time, you're going to see Bitcoin this week, right now, pull back to around 50K. And then the final 5 weeks, if you go on a 240% run, like the bull run of 2017, you're going to see that massive number, right? You're going to see that massive number by the end of the year, $170,000 Bitcoin. And here's what's even crazier. Let me see here. It's on the weekly. Oh, I mean, I like that projection. So what do you do? What you want to see? Let's change Yes, normal distribution. End of the year. Got 125, 234. So if it's normal distribution, I mean, you're talking anywhere from like 120 to 240. I think I've thrown those numbers out before because I like switching in between just to get some numbers. Hell, you never know. You never know, even on this projection. Let's actually, because will I get enough? Yeah, it'll go right till the end of the year. 1, 2, 8. Let me throw PV2 on 8 first. Let me. Good night and good night. And PV2, let's throw you on candle 8. And let's change you to, oh, it's already on normal distribution. 142K, right? So that 240% move would be right about here. I guarantee if I turned on a 4 standard deviation, it'd be right on it. Right on it. Pretty damn close. But if BTC, instead of doing a 240, wants to a 240% move in the last 5 weeks of the year, say we just go to the 3rd standard deviation normal distribution, there's only a 0.03% chance price action will exceed that, right? By the end of the year. So you're looking at $140,000 Bitcoin. Very interesting. I think we're about wrapped up. Yes, we are. How was that, ladies and gentlemen? Huh? This is what we do. If you're watching this on YouTube for the first time, we're Alpha Trading. We trade volatility, probability, and statistics, and we like to teach people to do the same. The link to our Discord's in the description of the video, or in the description of the videos. I still got probabilities on the brain. If you did get through this whole video, your eyeballs are probably swimming in the back of your head, and you're wondering, well, obviously he knows what he's talking about, but I have no clue what he's talking about. Come into the Discord, check us out. Right, small monthly fee if you want to get in at the base level. All right, that's just to keep the riffraff out. Is there a lot of riffraff out there? Yeah. We want people coming in to learn. We don't want people just coming in, hanging out, shilling shitcoins in our Shitcoin Sherpa channel. That's not how we roll. We want people to learn how to trade volatility, probability, and statistics, hence the $10 fee if you want to come in, right? That's just the base level. Get a few little basic indicators that we'll supply you with. And then there's a higher level of the Discord where you get the whole freaking Alpha Trading system released on you. The Kraken. We released the Kraken. So all that being said, thanks guys for watching live in the Discord. Appreciate you. You know we do. We love you guys. And wherever you live at in this realm, in the metaverse, right? We're in the simulation. I talked to MJ earlier. Go drink some ayahuasca. Go smoke some DMT or something. You'll realize real fast you're in the simulation. That being said, have a wonderful rest of your morning, afternoon, or evening. We'll see you tomorrow, 2 p.m. Pacific Standard Time. See you.